Did you know that despite all of the problems the industry's top EV business faces, Cathie Wood is still bullish on Tesla stock? Problems are surfacing from all sides, criticized by detractors and ardent Tesla supporters. Continue to tune in and observe to learn more about Wood's position about Tesla. Given that Tesla was the pioneer in the market for electric automobiles, a lot of investors believe the firm has enormous promise. Although Tesla needs to keep pushing to stay at the forefront of the electric vehicle market, some analysts believe the firm has outpaced its investors. You will learn what Cathie Wood thinks of Tesla today. Tesla is an American automobile and sustainable energy firm that creates, develops, produces, leases, and markets energy generation and storage systems, as well as electric vehicles in the US and other countries. With aspirational and environmentally conscious objectives, Tesla rose to global recognition. In actuality, Tesla leads the market for electric vehicles, with other manufacturers trailing closely behind. According to Forbes, Cathie Wood is an American investor, a renowned stock picker, and the founder, CEO, and CIO of ARK Invest, a $60 billion firm that makes investments in cutting-edge technologies like genomics and self-driving cars. One of the most underappreciated investors in the industry is Cathie Wood. Her investment ideas are not only highly appealing, but she also has the track record to support her shockingly astute assertions. Additionally, she is renowned for giving monthly updates on a variety of topics, including inventions, monetary and economic policy, and her thoughts on the Fed's rulings. The United States Central Bank, the Federal Reserve System, or Fed for short, is in charge of overseeing the country's financial and monetary systems. Cathie Wood, CEO of ARK Invest, has never been afraid to make audacious forecasts. She set a price estimate of $4,000 per share for Tesla stock in February 2018. That price estimate suggested a market capitalization of $720 billion, but that was prior to the split. Given that Tesla's valuation at the time was only $60 billion, that estimate caused quite a stir on Wall Street. That's not how many experts swing for the fences. Looking back, Wood seems to have made the right decision. Tesla's market capitalization last year topped $1.2 trillion, and the company is currently valued at $810 billion. Some investors are questioning ARK Invest's other audacious valuation model in light of the call's relative accuracy. According to a recent research, the stock of the well-known streaming platform Roku is expected to rise by 850% to $605 per share by 2026. However, Cathie Wood anticipates that in 2026, a share of Tesla will cost $4,600. As previously stated, Wood's optimism for Tesla is not new. An open-source valuation model for Tesla's stock was made available to the public by ARK Invest. According to the company, this strategy offers investors a more transparent method to view the research that ARK Invest has conducted on a significant investment. Our Tesla model, while calibrated to our projections for 2026, is methodologically cautious in our opinion. In a blog post published last week, ARK analyst Tasha Kinney stated, "We assume that Tesla stock will trade like a mature company rather than a high-growth one in 2026. When it came to Tesla's potential robo-taxi business and capital efficiency, ARK revised its price target after stating last year that it believed the company's shares would reach $3,000 by 2025. Updates to capital efficiency calculations, autonomous ride-hail assumptions, and 2026 expectations are all included in the company's 2022 Tesla research. ARK has established a price target of $4,600 for Tesla by 2026 based on the aforementioned model. Based on this model, ARK determined that there is a 25% chance that in a negative scenario, the value of Tesla shares in 2026 would be $2,900, and in a bullish situation, it will be $5,800. Tesla's capital cost per additional unit of capacity has decreased, previously from $84,000 to $7,700. Although ARK currently projects that Tesla will only spend $2,000 to $7,000 per incremental unit of capacity in 2026, It had previously predicted that the company would spend $6,000 to $8,000 per unit of capacity in 2025. Regarding Tesla stock, what are your thoughts today? Post your ideas in the space provided for comments below. RK Invest estimates that in 2026, Tesla's robotaxi operation will generate over half of its estimated earnings before interest, taxes, depreciation, and amortization, EBITDA, and 62% of the company's enterprise value. In terms of earnings, it is anticipated that in 2026, the EV business will account for 57% of Tesla's overall earnings, with the robotaxi business accounting for 34%. In the worst-case scenario, the corporation would have made $372 billion in sales, a compound annual growth ratio, CAGR, of 24%, and a share price of $2,900, with a market cap of $3.3 trillion in 2026 if 10 million units were sold. In a bull market scenario, Tesla would sell 17 million units in 2026, bringing in $513 million in revenue. The company's share price would reach $5,800, giving it a $6.7 trillion market capitalization. A 42% CAGR would be included in that. This is presumably the reason Cathie Wood believes this stock has a 560% upside. Wood regularly buys EV stock, demonstrating her support for her confidence. As of June 21st, it has a weighted of 7.23% across all ARK Invest ETFs, making it the largest position overall. Previous to that, in the first half of June, the Cathie Wood-led ARK Investment Management increased the number of Tesla shares in its portfolio, increasing its exposure to the manufacturer of electric vehicles for the sixth time this month. RK Invest purchased 300 Tesla shares, valued at an estimated $198,801 in value. Electric vehicle, EV, sales doubled globally to 6.6 million units in 2021, and the trend is still going strong. The International Energy Agency reports that in the first quarter of this year, EV sales increased by 75% year over year. Of all the EV manufacturers, Tesla is at the forefront. Similar to several manufacturers, Tesla experienced a 22-day production halt at its Gigafactory Shanghai in late March and early April as a result of China's stringent lockdown procedures and an increase in COVID-19 instances. It's difficult to predict with certainty what will happen to Tesla stock over the next few months, given that Tesla CEO Elon Musk has issued a warning over the path of the U.S. economy. However, if the first and second quarter profit reports were any guide, Tesla has been operating as it should. In addition, Tesla's Fremont facility set a new record for daily production output this month. Meanwhile, Gigafactories Berlin and Texas are also stepping up their production. Not to mention the future income streams from driverless ride-hailing cabs and the Optimus humanoid robot, Tesla continues to lead the electric vehicle market and is well positioned to venture into new technological frontiers. David Traynor, the CEO of New Constructs, stated after the recent decline, "It will be difficult to hold a position when the stock has been falling so much. Tesla has been down every day. However, I additionally believe that it does indicate a slight shift in confidence," he continued. "To say a lot has happened in the last few months that would give anybody with a sense of fiduciary duty pause about what to think about Elon Musk and the businesses he's involved in." Wood is still a strong supporter of Tesla, though. Indeed, Wood stated in an April interview with Yahoo Finance that she still has the utmost faith in Tesla. After Wood disclosed that ARK had met with Mary Barra, the CEO of General Motors, she made this statement. The largest automaker in the country is the global American firm that manufactures automobiles, General Motors. Before Toyota overtook it as the largest in the world, it held that title for 77 years. Why does Cathie Wood think that Tesla stock can make someone a millionaire? She claims that over the previous 5 years, Tesla's revenue growth has compounded at a rate of about 48% annually. She underlined that it happened even during a period when Tesla was dealing with numerous difficulties. She went on to say that, in reference to both herself and ARK Invest, Their projection for the following 10 years is between 50 and 60%. Time will tell if Cathie Wood is correct or incorrect with Tesla. It is known that ARK Invest has placed a significant wager on Tesla's future. Tesla is the second largest stake among all of the ARK Invest ETF's total holdings. Approximately 6% of the fund is made up of Tesla, whose shares were bought for between $256.67 and $326.30. Remember to visit our channel, click the like and subscribe buttons, and watch more videos about Tesla stocks.